You're shaming me.
I'm not shaming you. No. I just want to get going. It's a lot of banter. Everybody's having too much fun. I want the banter on air. I don't want to lose the banter. It's the best spot.
Yeah, the noties need to hear some Monterey talk.
Hey, noties.
Hey, noties. Oh,
now we're on. Now we're on air.
Quiet.
You got to give us a 3, 2, 1. Justin, I don't want to have to repeat myself every day. Starting Monday, I want a big, proud 3, 2. I want you on air for it.
I thought you told them not to say the 3, 2 because it was on the screen.
This is the full. You're getting the full Jason experience here. Get yelled at for not doing something, then start doing that thing, or to stop doing something.
And he's like,
"Don't
do that thing."
And get yelled at because you're not doing that thing.
Do that thing.
No, I always love a good 3, 2, 1. Molly doesn't do a good 3, 2, 1. She never does that. I do it for her every time. You got producers aren't doing it. I'm a very generous performer. You understand?
Here he is, putting the whole team on his back.
Let's go. Okay. Say hi to the noties while I just try to tweet this. I need my
long trend. We are gonna have thoughts on the Klarna news. Happy Friday, everybody! Happy Friday. Everybody's a little burnt today. Let's be real. We're all.
I think people are ready for this weekend. Yeah,
crawling toward this weekend. Definitely. Surge Dog. Hey, Noti fam. Oh, Will Boardman. Thanks for giving us a 3, 2, 1.
Thank you.
Appreciate you, buddy.
I think I'm live on LinkedIn. And my restream chat, where's my restream chat? This restream chat has stopped working for me. Let me see if I can find. Oh, I need the login. Hey, DM me the login for restream.
For our restream.
Our restream, so I can get the chat up. And then some Molly the link for the restream chat app. Yeah,
I just
see this app. There's an app that lets you separate it out. That's much better.
I just watch it in YouTube actually. Like I made the restream window big, the video window big, and then I with the nice big widescreen. I've got the YouTube chat over here, like in a separate browser window.
Nick, send me the restream login. Okay, there it is. I see it.
Long weekend vibes for show.
For sure. So,
Jake, how getting that?
I'll tell anyone my password.
Definitely.
Oh my God! It's just like, can you please use the passwording?
That's a great Nobody will ever guess that. It's a great password.
I love Uncle Jason. 1, 2, 3 is your password. You're trolling me. That's like when my wife's like, can you give me the password for this? And I change it to, my wife is the greatest wife ever. ! Exclamation point. How's that for a super troll? That's a free tip for all the gentlemen out there.
It's like 1... what's the carrot 3? I heart my wife.
Jason says I love
W
James
exclamation
Dolan.
point F3. Yeah.
James Dolan is my guy.
When I
oh my God! Just let me through this goddamn. I'm like stuck in Catchbaland. I know what a fucking crosswalk is.
I'm sorry. I'm only laughing in legit sympathy.
You know who created the first CAPTCHA?
A monster.
All right, everybody say hello to me.
Psychopath.
Max Levchin.
Yeah, that makes sense.
Oh, really?
Yeah, they created the first CAPTCHA because there were so many bot accounts getting created on PayPal that they
I think I'm also on my Twitter. So if anybody is on Twitter, LinkedIn, or Facebook watching this, can you just type a comment or say hello? Because I'm trying to see if I'm actually there. And then if you're on YouTube, just tell me what city you're calling in from, and then comma what your plan is for the weekend. Oh, there we go. Okay. Hey everyone.
We're just making I heart my wife passwords over here in the chat. So if you just want to copy any one of these,
okay, perfect.
Good for you.
Yeah, it's good for domestic tranquility. Okay, my quick time, the bliss, absolutely, yes, the bliss. 4 minutes 24 seconds. Okay, everybody, let's go into the weekend. Oh, by the way, I did this tweet. Oh, let's start the show. Yeah, okay, here we go. You want to do the intro again, or do the intro at the end? What do you guys want to do? We keep doing that.
You change your mind on this every day. I like doing 2 of them.
Gotcha. Okay, here we go. In 3, okay. In 3, 2. Hey, everybody! It's Friday. Yes, you made it to Friday. Monday, Tuesday, Wednesday, Thursday. So many great episodes, so much great news. But today is Friday, which means we're going into the holiday weekend. We will be doing a Sunday show, though, no Monday show. But I'm really excited for today's show. Molly, what's on the docket?
Yeah, we got a variety show with a bunch of news. A new little update from the BlockFi CEO denying that FTX is buying them for $25 million. Maybe not denying that they're buying them, but not $25 million. I don't know. And we'll see. We're going to discuss.
There's a bunch of other crypto quick hits. We'll get through them quickly of just what's going on in the crypto contagion collapse. And then some talk about Sequoia and them holding their big winners in their public equities fund, the new Sequoia fund, and if that's a good idea or not, having this evergreen fund. Obviously, with the markets down, there's been some criticism.
Yeah, kind of an interesting what do LPs want conversation. Zoom and other quick hits is looking to expand beyond video conferencing. Is a competition with Slack heating up? I freaking hope so.
I predicted that. And consumers will be the winners if that does happen. A few more quick hits. The FCC also approved Starlink for moving vehicles. That's amazing. And Klarna is apparently raising around at a $6 billion valuation. Remember, they were up in the $40 billion club. So that is quite a striking markdown if it's in fact true.
That one hurts. And then before we will have Rachel's OK Boomer. Before that, we're just going to talk about basketball and team culture and how it relates to company culture. We didn't get to talk about TV yesterday on the show, so today we're going to talk about basketball.
Basically, we're going to dunk on the Brooklyn, New Jersey Nets, and we're going to laud the amazing Warriors in relation to millennial culture and management styles. It's going to be a great show.
Stick with us.
Okay.
That should be their punishment, the Nets, for this embarrassment. They have to move back to Jersey.
Yes, that would be
back to Newark. Back to the eyes.
I refer to them as the New Jersey Nets. I refuse to refer to them as the Brooklyn Nets. They'll always be my New Jersey Nets. Your New Jersey Nets, and please welcome.
New Jersey Nets.
All right. Let's get started. Okay, in our first story, we talked a little bit about FTX acquiring BlockFi yesterday. So should we start there, Molly?
We should, Leah, before we get into the crypto news, let's start with possibly a correction or at least a publicly issued clarification. So after we recorded yesterday's podcast, this was where CNBC and I think PitchBook also reported that FTX was nearing a deal to buy BlockFi for $25 million. The BlockFi CEO, Zach Prince, came out and denied the news, said lots of market rumors out there. I can 100% confirm that we aren't being sold for $25 million. I encourage everyone to trust only details that you hear directly from BlockFi. We will share more with you as soon as we can.
It seemed extraordinarily low. We did say that yesterday. We did, I think, give the caveat, if this is true, this is a report. So when something's a report, we always tell you which news source it's from. So when we say it's from a news source, you as the listener should always say, okay, how did the news source get their information? Sometimes it's a rumor, sometimes it's a leak. And, depending on the publication, some people run rumors very quickly. Other people need 3 sources. Some people will allow anonymous sources. Some people will allow anonymous sources if they're vetted. So you have to make those own decisions. We're a show that comments on the news. So when a news story happens, we're giving commentary on that. So just so people know the rules of the road here, we're not calling BlockFi and checking on that. We're reporting on a report, right? So we're commenting on a report. Just understand that. And we give the caveats all the time, I think. So for people who don't understand how this works.
Although I'm still going to go ahead and try to parse this tweet commentary style, because the tweet does not say we are not being bought.
Yeah, it's clear that there's a deal going on.
We are not being bought for $25 million. So it seems to me that it's very, look, maybe he meant we're not being bought, but it seems like there's definitely a deal in the works.
Sure.
And maybe that specific number is in flux, but like one note he just said, Jay Sidhu just said, would be hilarious if it's $26 million. Like,
well, I think maybe what's going on here is there was the $250 million line of credit they were talking about. So I even said, well, maybe it's 250 plus 25. That would make more sense to me, $275 million. Then you would be looking at, if it was a $5 billion company previously, going for 500 million would be 10%, going for 275 million would be about 5% of the original value. A crypto exchange losing 90% or 95% of its value makes sense. And there could also be a bunch of debt here too, Molly. So we don't know about the assumption of debt. So sometimes when you calculate a deal, there could be 25 million in cash, and there could be 250, 500 million to pay off debt holders, right? And settle debts. So that's why these deals can be a little bit of a moving target. The assumption of debt is part of the price. So sometimes companies even get bought for their debt. Somebody's got $1 billion in debt. Somebody comes in and gives $1 billion. They essentially are buying the company for $1 billion because the company has those liabilities. So that the price would be $1 billion.
Yep. But yeah. So we can say that this is the official response from BlockFi. It doesn't. It's not denial of a deal, but the pricing, at least at minimum, still seems to be in question. What is not in question is that the crypto drama and collapse continues. The latest story today is that a crypto exchange, another exchange in trouble, basically, a crypto exchange called Coinflex, has paused withdrawals since last week. And they said that they had to pause withdrawals because a big investor reportedly had defaulted on a $47 million loan. It's led to like a public feud with this investor. Coinflex, in case you hadn't heard of it, is the 96th largest crypto exchange by trading volume, according to coinmarketcap.com.
So they're in the top 100.
So they're in the top 100, just
barely
right over the line. It's obviously the volume is down substantially since they paused withdrawals. And then Coinflex CEO Mark Lamb last week tweeted Roger Ver, who apparently some in the media call Bitcoin Jesus, owes Coinflex.
I thought that was Michael Saylor. I named Michael Saylor Bitcoin Jesus.
I know. And evidently that was taken. I don't know. This like never gets any less absurd. But yes, the CEO tweeted Roger Ver owes Coinflex $47 million USDC or million USDC. We have a written contract with him obligating him to personally guarantee any negative equity on his Coinflex account and top up margin regularly. He has been in default of this agreement, and we have served a notice of default.
Oh, okay. So, well, wait, shouldn't they then liquidate him? Isn't this against his holdings? If they gave him a margin loan, why are they asking him for money? They should just liquidate his holdings. Or did they move too slow and not do it programmatically, and they gave him enough space that they are now not able to liquidate?
According to CNBC, there was, in fact, an agreement in place that prevented Coinflex from liquidating Ver, like typical accounts with negative equity, I guess, because he was a really big whale. Now, he seems to dispute this and tweeted, recently some rumors have been spreading that I have defaulted on a debt to a counterparty. A counterparty. These rumors are false. Not only do I not have a debt to this counterparty, but this counterparty owes me a substantial sum of money, and I am currently seeking the return of my funds.
Okay, well, this is what happens when you have a collapse in the market. You stress test contracts. So most of the time in an up market, this is just a micro lesson here on how contracts work. Most of the time, you don't have to enforce a contract. All the clauses in the contract are there for a reason, but most people do not have the experience of having to actually execute on a piece of that contract. So as but one example, you might have a non-solicitation. It's pretty normal in your employment agreement with your employer. Non-solicitation means you can't go to another company and then solicit other employees to go there. This never comes up. But when it does come up and some director of sales leaves a company or a CTO leaves a company and all of a sudden 4 or 5 other employees do, you then could have some serious ramifications for the person who is soliciting. In other words, you can personally hold them liable for the damages of those people leaving. The other company gets dragged into it. It's like an edge case, but this is what's happening in law right now. The edge cases are all going to be stress tested. I'll give you another one. In contracts for events, I always have really been detailed about what the force majeure and act of God clauses are. People are like, why do you care about this stuff? I'm like, well, I lived through 9/11 and I had an event during a hurricane one time. And in both of those cases, we had to have a negotiation with the vendors and say, listen, in our contracts, we have a thing that if we have to move the dates, we move the dates and we all work together to move the dates and we don't owe you the money and we got our money back. So during COVID, we had a deposit down with a hotel and I just basically knew that we were in the right. And we told them, listen, we're talking about $20,000 here. Don't make us file. Just give us our money back. And they dragged their feet. And then I sent a legal letter and I said, this is going to just cost you, you're going to have to pay for our attorneys. It's going to cost you $10,000 in legal fees. Just give us our 20K back. And of course, once I presented it to them as such, like the stuff is being filed on Monday, we got our money back. Because I said, look, it's in the contract here. We signed it. And then sometimes I'll even have people initial specific portions of a contract so they understand it. Like this is a serious portion. So there's a little device I came up with for people who don't read. And I will tell them in the email, hey, I'm sending you this contract. I need you to read this portion. In fact, we were just having this with a contract for an event that takes place in Napa. And there is a concern about wildfires. And so we're literally going down to what is the rating of the air quality, the AQI. And we're going back and forth with what's healthy, what's unhealthy. And I have to make a decision. Do I want to assume this risk? And then also getting insurance for events, yada, yada. And then you have to read those things. So what's happening right now? When the storm hits, whether it's for a conference or an employee who goes rogue and steals like the database of contacts. I had this happen one time. An employee downloaded our database of contacts for our sales. Yep. And we caught them because like it's pretty easy to catch people doing stuff like this. And yeah, we caught them. I won't say how. And I just basically sent a letter to the employer who they were hired them and to them and said, listen, the second any of these advertisers are on, your, properties, we know that you've actually contacted them and we're going to contact them. And if you hire this employee, we're going to sue you. And I take a pretty hard stance of stealing. And so the person got their job offer rescinded. And then I was left with a choice, Molly. Do you sue a former employee or not? And I just said, write me an apology letter and I will not sue you. That literally made them write me an apology letter.
Dang.
Attorney's like, you're a maniac. I'm like, yes, I am.
What would you do to Roger Ver? Just kidding.
Wait, who's that?
That's the guy who supposedly owes this $47 million.
Oh, for him? I would make him write an apology.
He says he doesn't know. Yes.
Write an apology. That's
letter.
What's happening here. We're going to see this over and over again. Sorry to belabor the point. This is why contracts matter. In an up market, nobody cares. Everybody's making money. Who cares?
Yeah.
In a down market, these things matter. This is why getting educated to what each of those clauses in contracts are there for and asking somebody, can you explain to me in plain English, your attorney, your employer, your partner, why is this in here? And you can have like a really good education on that.
So in this case, like the contract in question or the term in question is the one that says Coinflex can't liquidate Roger Ver if indeed he doesn't meet his margins.
Yeah, I mean, there's probably
he was probably like, I'm good for it forever.
Here's what happens. Sometimes people will say, I want these special terms. I would like a week's notice to correct, right? So let's say they said, okay, you can draw my stuff down, but I have 10 days to correct, 10 business days to correct. Okay, so now we're getting into the nuance of that. How many days is it 10? Okay, is it 10 business days or 10 calendar days? Then they could liquidate him, right? So there might be something like that where he has X number of days, or this could have been a verbal agreement. In other words, no agreement, or it could have been an agreement over email, which is like not as good as a print one, but could be enforceable. So you really want to, anytime you have to do a contract or have an agreement, this is my advice to founders, get it in writing and sign it. If you don't want to engage a lawyer, you can write, here's the understanding of our agreement in bullet points and send it to somebody in a DocuSign and you both sign it. It's just a memorandum of understanding between you and another party. So, I agree, that we're going to start this company together. We're going to split the equity and we're going to give 10% to our employees and we'll vest over 4 years. And you and your partner can just sign it on a piece of paper. It would be binding maybe not as binding as a legal document, but it's still binding. So plain English contracts are better than nothing, certainly better than verbal. So I bet there's like a verbal or an email agreement here and they're going to debate some finer point. And that's what the next 3 years in crypto is going to be.
Exactly. And it's not going to matter. It's not going to matter. It sounds like now Coinflex is going to raise capital to try to repay this $47 million debt regardless, sort of like aside from whatever is going on here, because again, he seems to be disputing this allegation. But Coinflex is going to issue, this is going to go great, I bet. Coinflex is going to issue a token with a 20% annual return.
Come on, guys. Seriously? Is this gaslighting now?
That sounds so great. I should get one.
Absolutely. Let's go. Would you accept Luna as collateral?
20%. That's amazing.
I mean, yeah. What's the, Fed's interest rate now, or what does a mortgage go for now? 6%. Yeah, sure. This makes sense. That it would be 3x plus a mortgage. Sure. Who am I loaning the money to? Is it a payday loan? I mean, come on, people.
So people are gonna come along and buy these tokens? That only one person's gonna come in and buy these tokens, and that person is SBF.
Listen, all these tokens are worth nothing. Stop buying tokens, people. They're not going to be worth anything. The floor is 0. Your floor on your tokens is 0. Like if you're doing this, you're literally betting on Pokemon cards. Let's just be honest. I mean, I've been saying this from the beginning. If it doesn't have a use case, if it's
Pokemon cards have intrinsic value, Jason.
That's actually true.
Okay, fair enough.
I'm joking. That was a joke.
No, but you can.
They do. There's nerds who love that stuff. I mean, the intrinsic value might be $1 each, 1 penny each, or $100 each, depending on the level of nerditude. I agree. They do actually have a floor value. I mean, you could.
I know totally. We know you were kidding, Nick, but actually, my boyfriend's son has sold Pokemon cards for up to $35.
I have an imperfect one of the Pokemon.
A legendary Charizard is very rare.
Very rare. Like, come on. The Pokemon cards make a lot more. Pokemon cards make a lot more sense to me than most tokens.
And then a token that's going to supposedly have a 20% annual return from an exchange that has paused withdrawals.
Okay, yeah.
Somebody take my money. Who do I make the check out to?
Okay, listen.
I'm in.
Okay, now after we recorded, okay, I think we got to go to the FBI story. We got to get through.
Yeah, we do.
This cannot be
because,
the show.
Like you just said,
This Week in Startups cannot turn into just a giant perp walk every day. So,
well, we almost have to start, don't you think? I think we go with the fraud, the reckoning, the fraud, and then the FBI. What do you think? Because these are both
sure. The reckoning, and okay, fine, that makes total sense. Go with the reckoning. The reckoning is underway. Okay,
the reckoning is underway in the crypto department, as Jason has been predicting. The next however many years are basically just going to be about the lawsuits. You know who's going to reap their crypto fortunes now? The lawyers.
Yeah, it's going to be a lot of that. So the Commodities Future Trading Commission, CFTC, charged Mira Trading International for fraud. Is that the story we're talking about here?
Yes, we are.
Yeah.
So Mira, the CFTC, I don't even know what that is. Mira promised.
What did they promise?
Passive income.
Okay, I like it.
When I hear those words,
like a dry cleaner, right? Or like a kookaroos. How many kookaroos do you kookaroos? Okay.
Allegedly, Mira promised a passive income return of 10% a month.
Wait.
Hold on a second.
Not a year. Okay, there's no muni bond you could buy for 10% a year. There's no but you could buy a kookaroo. No, it's not a kookaroos.
I got my red flag.
10% return a month.
A month.
Which means every 7 months you double your money. I love it.
A month.
Let's go.
Yeah, forget time blocking. This is the rule.
Somebody do a quick back of the envelope. What is 10% a month compound to a year? There's some way to do that calculation on an internet calculator, but it's a lot.
So the CFTC came along and said, hey, that sounds like it might be a fraudulent multi-level marketing operation that scammed investors out of billions of dollars.
Yeah. Okay. Yeah.
So there you go. If your family member, producer Nick wants to know, asked you about an investment opportunity with 10% returns per month, what would you tell them? I would take their phone away.
I mean, I would tell them this requires you having the backstop of breaking somebody's legs. Like, this only exists. A 10% VIG only exists in money laundering, loan sharking. Like, if you gave somebody $10,000 to gamble on the Jets and they were stupid enough to bet on the Jets or the Nets, then you could say to them, listen, every week, you got to give me 4 points, 2 points on the money you owe me. So every week you give me $200 until you pay me the $10,000 back. That's not even the principal. And so, 2%, I think, would be a typical VIG on 10 dimes, a high society out there. Yeah. A week, which is, about 10% a month. Yeah. So there you go. Insane. That doesn't exist in the world.
It doesn't. It's not real.
It's not a thing, real. Molly. You can't get. Yeah. Why did people fall for this? How dumb are you fucking people?
Because why wouldn't they? Because everybody wants to get rich quick and no one wants to work.
Yes, I know. Just
That's
please.
Exactly why.
I mean, even 10% a year is outrageous. Like, a credit card company for somebody with shitty credit, bleep that out as well, they could charge you 10 or 15%. Like, that would be bottom feeding. But this is the realm of loan sharks. So anyway, it just, people, please, anything above what you would get on a loan, just think about what you pay in interest. You're the other side of the transaction. What's the most you ever paid in interest? 20% on some crazy, stupid credit card you signed up for and you didn't read it, and then you saw the amount you were paying, or you consolidated your loans?
All credit cards now, by the way, that's all of them. But yes.
Really?
Oh yeah, it's insane. I mean, I'm pretty religious about this, but 16 to 20% is standard for credit cards, even when interest rates are at zero.
Here's another idea, folks. Don't use credit cards. Don't use credit cards. Just use Klarna. It's free. It's free money.
That's a rich man talking. You got to use credit cards to build your credit. Use credit cards. Just don't spend what you can't afford to pay.
Dude, if you use credit cards wisely and pay them off every month, they give you free money. That is free money. I just booked a whole trip to Mexico with points. Boom, free.
Yes, I do. I do take that back. I do use credit cards all the time for free businesses, and I have 1 million Bonvoy points and 1 million United points, and I just never use them because I try to, these days I don't always fly coach, it's very hard to use those for a business class trip because they like United is so stingy. They're just like, yeah, you can use it for business class, like on this flight at 5 a.m., but you can't use it on the 9 a.m. or 10 a.m. flight. And I'm just like, come on, just let me use these goddamn points.
You should donate those to your staff as like an end of year bonus. That's a good, I've heard of people doing that.
No. We're in a recession. Bonuses are over. Forget that.
Other news, I found a legendary hollow Charizard listed on eBay for $1,000.
Oh, I'm sorry.
So
a what?
A Pokemon card.
Stop. Enough with the Pokemon cards. Enough with the 10%.
I'm just saying, I'm doing Pokemon cards instead of crypto for sure. $1,000.
I do think that collectibles are a great thing to spend money on if you get joy from them. So I totally understand if you got joy from, I see Alexis Ohanian is like, he's like, here's my Street Fighter, Nintendo cartridge, and it's in lucite, and he's so happy. And I'm like, you know what? If you paid $100 for that and it made you happy, some people pay $100 for foie gras on their hamburger. It makes them happy. I don't care. Like, go for it. Put it on your shelf. Nerd out. If you like the baseball cards, my friend likes to trade baseball cards. Like, yeah, go for it. I think that's fine. But you have to understand, 10% a month is a giant scam, and this is when we're at peak grift.
It's awesome
when a crypto person makes the FBI's 10 most wanted list. I think there were some .com people who may have made this list in the .com era. We have to do some research. But I want if the noties in the audience can tell me in the chat, who are the most famous business people or tech people to make the top 10 FBI's most wanted fugitive list? This is rarefied air.
It is. This is pretty special.
The FBI announced this.
Ruja Ignatova. Ruja Ignatova, a Bulgarian woman, is wanted for her alleged role in running a cryptocurrency scam known as OneCoin. She is often referred to as the crypto queen.
Oh.
She now...
I think she spoke that NFT week last week, right, Rachel?
Probably. Yeah. Was she at NFT New York?
NFT New York.
She is now, much like Mint Jelly on the lam. The FBI says she defrauded victims out of more than $4 billion.
What?
She started... She started in 2014 and then disappeared in 2017 with at least $500 million.
You know what? I follow her on TikTok. She's pretty good.
Ruja Ignatova. Yeah. I want to know so much more about the crypto queen.
I do. This feels like
Julio Flores in the chat, by the way, is like, what's her grift? How did it work?
All right, this is it. This is the one. I think this is the one. I think this is the one we're going to produce our own short film on.
Yeah.
I am going to produce a short film. Lana's going to write it.
The lipstick.
Lana's going to write it. It's just going to be a story of what she did before she was the crypto queen. This is my script. What she was doing before she became the crypto queen, how she found out about crypto, and then where she is now. Just those 3 scenes, but nothing about the grift. Just like, okay, she's working in this office at a construction company in Jersey City. Right? And she's in one of those containers. Some guy from the construction group comes, he delivers the coffee, and he takes out his, Coinbase app. He shows her Coinbase, or he takes out Mt. Gox and shows her Bitcoin. She buys 10 Bitcoins. He gives her $10 to buy 10 Bitcoins at $1. It goes up to $300. She feels like a genius. And then she has an idea when she's out with her girlfriends at a club on Saturday night in Newark.
Yep.
And then boom, we flash to wherever she is now in Hong Kong, eating Peking duck, trading flash drives with crypto on it.
Amazing. Zen
That's
Prophet. Zen Prophet already, he gave us the title, Inventing Ruha.
Perfect.
You know,
Let's go.
yep,
Come up with the titles, everybody. This is
Absolutely
going to
love
be
it.
a This Week in Startups production. I need a director and somebody. I need to cast for this. It's going to be like my own Goodfellas. So, Lon, I need a short script. I'm putting a budget up today. Nick, you're going to produce as well. Executive producer credit for Nick. Rachel, you can get a credit too if you get in on this. Rachel, I'll give you a part if you want a part. And
I want to host.
I'm putting what would this cost to make a 10-minute short? 10K? I can do this for 10K, right?
How about that?
Okay, $10,000. Lock it up if anybody wants to produce this.
And we need the razzle dazzle couple, definitely.
They should make a cameo. The razzle dazzle couple should just make a cameo.
Razzle Khan is the
Razzle
rapper.
Khan.
Oh my god!
So
all right, let's move
authorities say
on.
I had to read up about OneCoin, because when you read up about OneCoin, which is the coin that she grifted all this money with, authorities say OneCoin was one of the largest pyramid schemes in modern history. Although Ignatova claimed it was backed by a blockchain, prosecutors said there was none. She made up the price. The coins were not traded. OneCoin, but listen to this description and tell me how this is like substantially different. I mean, considering most people aren't going to check a blockchain somewhere to make sure their coins exist. OneCoin, this is according to then FBI Assistant Director in Charge William Sweeney, was a cryptocurrency existing only in the minds of its creators and their co-conspirators. Unlike authentic cryptocurrencies, which maintain records of their investors' transaction history, OneCoin had no real value. It offered investors no method of tracing their money, and it could not be used to purchase anything. In fact, the only ones who stood to benefit from its existence were its founders and co-conspirators. You guys talked on All In about how transparency was the first thing to go once the middlemen came into cryptocurrency.
Yes.
So this question of like, how could investors track their money on, let's say, Three Arrows Capital or an exchange that's totally obscured? I don't know. It doesn't sound that different. I mean, I get it that if a coin exists on the blockchain, you can trace it, but like most people aren't.
Listen, everybody who's listening, if you're giving your money to somebody and you need to check the history of that person. This is like one of the simplest ways to do that, and to ask questions and ask for documents. When you ask for documents or you ask for history on a person, you do kind of your little background check. If it doesn't check out, it doesn't check out. It's that simple. Anytime you ask for documents, if there's like some delay or reason you can't get the documents, by the time you've asked the third time for the same documents, just like asking an interview subject for the third time the same question and they won't answer the question, you kind of have your answer. You kind of have your answer. And the answer is guilty. This is my philosophy. You ask 3 times to get something. If you can't get the basic documentation after 3 times, like I would just ask this person, where are you incorporated? Can you send me a picture copy of your incorporation documents? And can I see your bank account statements? If you were making a big investment, just like basic stuff in diligence. And so, and if you see a return that doesn't make sense and you've never heard of anybody paying that interest rate, but it's paying off that interest rate, well, you're a pretty good proxy, right? Like if you've paid 21% to a predatory credit card from some retailer or something, okay, 21% a year is the upper bound in all likelihood. 10% a month is a lot more than 21%. So just do basic math, people. It's too good to be true. It is too good to be true. And
Stick
here's
to Pokemon cards. I just found one for $6,500, 2002. Pokemon.
Or another great way to backstop is to simply put in the smallest investment possible. So if you said to this person, hey, oh, great, I would like to put in $100. You want me to put 100,000 in? Great. I'll tell you what, I'll put in $500 now. And then can you get me this paperwork? And then I'll prepare $5,000 for Q2. And then if that works out and I get a good return and I can take that money out, I'll do 50,000 in Q3. And then always ask to get some of your return back. This is the other backstopping test. So you got 3 backstopping tests here. Ask for documentation. Number 2, go slow with your investments. Number 3, when you do lock in a bit of a return, cash out, stress test, see if you can cash out. So I was in some hedge funds at one point and I had put like 250K into them, and God bless them, they had like 2.5 times it. And I said, great, I want my principal back. Give me the 250.
Yeah.
And this was a super legit one. They were like, sure. Do you want to keep going or do you need the money for whatever? I was like, I just need money. Yeah. That's it. That's the reason. I was just like, I need money right now. Yeah, I'm making a
Yeah.
deposit on something. I didn't. I
Right.
just wanted to see
You want
if
my
I
money
could then
back.
play with the house's money. And of
Mhm.
course, then I just let whatever it was, 350,000, because they had just had such a great run for 2 or 3 years. And I put that money into something safer, and I'd let the other 350 ride, and it did great. So
Yeah.
stress testing and taking some money out is a great way to make sure that your investment is real. Or, and in this case, a Ponzi scheme, they would have used somebody else's money to give you your money back. This is what
Mhm.
happened with Bernie Madoff. People who stress tested and took their money out, he really tried to talk them out of taking their money out. And he would win that discussion most of the time. But other times people did take their money out and,
And they got somebody else's money to pay them back. Exactly. Which,
basically, yeah.
again, like, given how many, which again is similar to when you hear about these exchanges, it's like they borrowed this from this person or from this entity, and then this was the collateral, and then it was the collateral again, and and they're paying you back with more. It's not dissimilar, is all I'm
Okay,
saying.
everybody. And just to reset the room, we are now live streaming on my LinkedIn. So if you're on the LinkedIn,
Ooh.
please say hi. Tell us what city you're coming in from and your name and what you do for a living. And you can, of course, give a plug for your company or service. And anybody who's on my Facebook, I think Facebook doesn't allow anybody to see content unless I pay them. But I did stream to Facebook today, and I'm streaming to Twitter. So hit the reply on those. But the place we primarily stream the show is youtube.com/thisweekend, because it's the best live streaming platform. You hit the subscribe button, you hit the bell, you'll get a notification when Molly and I go on about 10:15 every morning, depending on the news flow. All right, let's keep moving.
Let's do it. It's a
I've
bit of a
reset the room.
thank goodness, because otherwise it would have been a hard pivot from Ponzi schemes to public markets.
Yeah.
And
Well, I
actually,
mean, and I think that's actually a good segue.
yeah,
If in an unregulated market, crazy stuff goes down. In a regulated market, you can have weird stuff go down, but you don't have the massive contagion like we're seeing now in crypto.
right. So now there is this sort of interesting debate that has come up about, possibly the greatest private investing institution maybe ever, Sequoia. Eric Newcomer wrote a newsletter
Friend of the pod.
friend of the pod, about Sequoia, being down on its public market positions in Unity and
everybody, yeah.
DoorDash, like everybody. But of course, Sequoia pivoted its main fund into an evergreen fund and is sort of investing in private and public markets at the same time. And that led to a tweet from, hold on, I'm opening it, Martin Tobias, I think, saying, responding to this piece, saying, I'm an LP in 17 venture funds.
Okay.
I hire those guys to manage private market risk.
Sure.
Some, he says, like Sequoia, have tried to manage public market risk as well to increase their fees.
Yeah.
I don't want my VCs holding public stocks. That's my job.
Sure.
And I think this is just normally this wouldn't, it wouldn't be a huge story that Unity and DoorDash have fallen over 70%, other than this kind of question, which is like, what do VCs do and what do their LPs want them to do?
So here's the thing. LPs in Sequoia's evergreen fund, my understanding, they've been public about this, had the option to do this or not.
Yep.
Most of them did. I think a very small amount didn't. So they had the choice to do it or not. And then second, they have a redemption period every year where they can take money out of it, or maybe it's every 6 months. So it's not like they don't have a choice here. They have the ultimate choice. So if they do choose, so this person, if theoretically they were a Sequoia LP, would have had the choice. So really no harm, no foul here. If you are trusting Sequoia with private markets, great. If you trust them with private and your public holdings, great. But you can pick. And so I think Sequoia is super savvy and they understand that. And if these companies grow, if a company is down 70, 80%, like in some cases companies are right now, in some extreme cases, it might be 90. But let's just say you have growth stocks down 60%. If they're growing 30% a year, there is a path, in the coming years for this to return. There was a point of time where Facebook traded, I think, at $17, right?
Mm-hmm,
and
mm-hmm.
so a lot of people sold their whole positions. They got nervous and they sold it. In fact, I think Chamath is very public about the fact that he sold a lot of his Facebook, locked in that huge win for himself, and then put it into social capital, which then was another win. So sometimes selling too early, and as long as you put that money to work in something that you think is higher growth, is a fine thing to do. In fact, when I sold some of my Uber shares, I was able to buy houses that appreciated in value and put it into other venture firms, which have appreciated in value. So you can't perfectly trade markets, and they have choice. So no big deal. And these companies are still growing. The chances that Unity and DoorDash are not bigger companies now than are not significantly bigger companies in 5 to 10 years and have significantly better stock performance in 5 to 10 years is very low to me. I think that they're doing the right thing by holding those.
I think there is this interesting question.
Yeah.
There was also like a Tiger Global thing about this, right? About somehow mixing its public and private funds and investments.
Well, they were public traders who then dipped into private. So you have both things happening. People who are private saying, hey, we'll hold our publics longer. People who are public saying, hey, let's get in on this private thing. It is two different disciplines. I think Sequoia is the rare firm that can manage both. I think it's easier to manage public as a private than it is as a public to understand privates.
Also, you should note Sequoia isn't actively buying publics.
Yeah, I mean, okay,
right.
This is very important.
Tiger was a hedge fund. Actively.
Right, Tiger is a crossover fund, so they invest in both.
Sequoia
not
have
buying
a public markets
stocks.
hedge fund though?
Sequoia has yeah. So Sequoia also has a family office, Sequoia Heritage, I think it's called, where they manage high net worth individuals. And so they are used to managing public markets equities because they manage their own, right? All those partners got Google shares. They all got Unity shares. So they have to make their own decisions about that. Most of them hold them because they know when you have a world-class tech company that hits scale, it generally hangs around for a couple of decades. So if you were a shareholder in Airbnb, Uber, DoorDash, Slack, et cetera, a lot of times these companies will hang around for 10, 20 years. Now, sometimes they get bought out like Slack does, but generally holding is historically been the right move. So,
well, I guess so. And I don't have religion on this. I just think it's a really interesting conversation to have, like from this perspective of an individual LP, for example, who's like, listen, holding might be the right move in the public stock, but I want to make that call. Like I became an LP in a venture firm because I want a private market return.
And you have that option.
And so once they get them, but then it's basically saying like, okay, cool, you have that option. Yeah. But what if you're an LP who wants to be in Sequoia and Sequoia's like, sorry, this is our deal. Like,
no, they gave people the option. They were very upfront about that. You don't have to do this. They said to people,
so you can remain an LP.
You can remain an LP. Yeah, they were very clear about this, and I think they were very clear in that the overwhelming majority asked them to do this. So this was something that I think their LPs wanted, which was more advice and more insights into which companies they should hold on to for the next decade. So if you were in Square for the private, if you were in Unity for the private moments in DoorDash, that could really inform your public market decision making. And I think Sequoia is in a better position to do that than the overwhelming majority of public market investors. Yeah.
So do you think that this is just a model that's going to continue? Like big funds like this are going to move to a model where it's sort of like a all-inclusive financial management,
full lifespan of the investment? Sure, why not? Yeah, I could see other folks. If it works for Sequoia, it's going to be a huge advantage because what could happen is over time they just have huge positions in the largest tech companies, which is just great insight, data, influence, et cetera. And then they're managing just a larger pool of capital. So yes, I think they will pull it off. But remember, they've been doing this for decades. So they have a lot of experience. And so it's not like some newbie doing this. So a lot of people thought they could do everything, and, doing everything all at once immediately is very hard. But if your firm is adding, like, look at Sequoia just added, they were one of the original YC LPs. They had backstopped YC famously when YC couldn't raise money during another downturn. They just launched a YC competitor this year. You don't think they've been watching YC for over a decade? They could have done it in the first year. They decided to wait. And then when they had the right moment where they thought they could add value, they did something thoughtfully. So you don't have to rush into every category. You can be thoughtful about it, right? And specialization in venture is great. And then adding adjacencies is great as well. But you just have to be thoughtful about it, right? It's back to that, like, thoughtful. Can you do it well? So
yeah,
anybody can launch a podcast about investing. Can you do it well is the question, right?
Won't be any good.
Every venture firm launched a podcast. Half of them haven't updated in the last year, right? So, it's like very easy.
It turns out it's a lot of work. We make this.
It turns out it's a lot of work.
It turns out it's a lot of work. I think this move toward evergreen funds is really interesting. I read about, Homebrew did something similar, like became an evergreen fund, but it's
with their own money.
Capital with their own money. Yeah. Anyway, maybe it's a VC Sunday school, just like because, funds it just seems like the business is evolving. And it's super interesting.
Innovation in venture has been amazing since I started working in it, because my 2 swings at bat, my first 2 big wins, were both in brand new products. I was the first syndicate on AngelList and did Calm as the first syndicate, which is still the biggest and best return of all syndicates in the history of the entire syndicate, AngelList or otherwise, until somebody can tell me a better one. And then I was the first Sequoia Scout. Both of these were crazy new innovative products. You got to give Ruloff credit for Scouts, first his creation, everybody copied. You got to give Naval a ton of credit for syndicates. There had been syndicates and SPVs. They were just done very privately. They weren't done with some crazy syndicate lead. And that was really Naval's incredible innovation, to which I thank him. And I thank Ruloff for being the first Scout. So there's a lot of these new innovative things. And I think it's great to try things.
How does it start to change? Nick and I were talking about this earlier, this question of how it starts to change, like the metrics by which firms are measured and the metrics that firms value versus LPs. You know, like if you're in an evergreen, then IRR seems like it's not as big a deal.
No, it will still be IRR. Cash in, cash out. That's what matters ultimately. How much cash did I give you? How much cash did I take out? So if I put $1 million into a Sequoia fund and they turned it into $5 million as a private market investment, and then so that was the first 10 years, I had a 5x cash on cash after fees. Amazing. And, Sequoia has put up funds that do even better than that. Then it went public. And I kept it in the evergreen fund, and it went so it went 1 to 5 over 10 years private. I kept the 5 million in there, and it returned, again 4x, and it went from 5 to 20 million. So now I started with 1 million, and over 20 years I got to 20 million. If you double your money in the stock market, typically 7% a year, every 10 years you double your money. That 1 would have turned into 2 after 10 years and 4 after the next decade. So you would be comparing, for an outrageous fund like Sequoia, like just the most elite, going from 1 to 20, maybe 1 to 15, 1 to 25, something in that range, as opposed to going from 1 to 4. And that's what having access to elite assets means for people with compounding, and I think that probably historically is probably a true statement. So,
all right.
Yeah.
Interesting. Interesting. And then speaking of just like, yes.
There just was one comment from one of our producers. Producer Nick said, well, if Sequoia sells and then some hostile, takeover happens, like we saw with Zendesk, et cetera, that's a bad outcome for everybody. So if Zendesk had their VCs staying on the board, supporting it, maybe even having more money available to them, and they could defend those companies, that's actually really good for the founders as well. So this could have downstream effects of keeping these companies very focused.
Like imagine if instead of Twitter, there was an activist investor in Square that tried to kick Jack out and mess everything up before the Cash App acquisition. How bad that would have been for the company overall, right? And that's kind of the bet that they're making, right? Roloff is saying he wants to just hold their ownership percentage so that they can stay on the board and keep making decisions, right?
Yeah. Sorry, I just got distracted. Yelling. Can you hear the kids yelling?
I heard. Oh yeah, we heard. Yep.
You heard it? Okay, sorry about that.
Amazing.
Alex, cut this part out.
Okay, sorry.
Will do.
Please quiet everyone down.
I beg you.
Out there. Yeah, they'll camp today. So, okay. Sorry about that, everybody. All right, here we go.
All right. Well, as long as we're talking about valuations, we cannot skip past this kind of astonishing story about Klarna, the Swedish buy now, pay later startup. We've been covering kind of buy now, pay later and the drop in this space. But there is news now that Klarna is reportedly raising money at a $6.5 billion valuation, which is about a seventh of what that company was valued at a year ago in June of 2021.
Yeah, it was in the 40 billion, I believe, was the number. And this is what we knew would happen. We thought private market valuations would come down slower.
Mm-hmm.
So this is kind of matching, I think, what happened to Affirm, Coinbase, and some of the other really big pullbacks in the market. So this is still in negotiation. Supposedly it's 650 million is what they're trying to raise. And sure, it's a haircut. But again, if the firm is growing 30 or 40% a year, if it's a high growth company in that space, they'll be able to catch up, maybe not to the $40 billion one, but it could still be a great investment for everybody involved. And the people who invested at that higher valuation, Molly, have downside protection in all likelihood. In other words, they get their money out first. And if the valuation comes down, they're going to be able to invest in this round. So, they have the option to take their pro rata in this round in all likelihood. And if you do a down round like this, there's a little bit of negotiation that occurs for those ones. The people who do get, will take the brunt of this will be the employees and the founders who, might have thought they had 6 times as much shares, but because they're the last to get paid, the common gets paid last in a sale and the preferred stack gets paid first. So when people make these preferred bets, as long as you believe that the company's not going to go to zero and it's going to trade above that $6 billion valuation, you're pretty protected. So, yeah.
Do you want to do another quick hit on Zoom here? Should we go straight to basketball?
Well, no, just looking at some of the Affirm.
Some more of the firm.
We have some of the Affirm data here. We could just go through real quick.
We did. We talked about this a little bit back in May because there were questions about just this whole space, right? In this valuation, the Klarna Affirm comp that producers did back then was that Affirm's GMV was $8.3 billion, about 10% the size of Klarna. Or rather, Klarna is 10 times larger. Affirm's operating loss was $380 million. We were doing this comparison because Affirm is public and Klarna is not, so we didn't know for sure. Affirm's operating loss was $380
I'll be right
million.
back. Hold on. It's not going to stop. Hold on.
Tough scene for BNPL right now.
Tough scene for BNPL right now. The end.
Yeah,
that's all I want to say.
Yeah,
it's like, I don't want to do all the numbers,
but
I don't want to do them.
Yikes.
Yeah, basically yikes.
I will say I don't really get the BNPL appeal, but I did use it for one. I used Affirm for one purchase right before my wedding.
Yeah.
And because we had a million different vendors to pay and stuff like that.
Yeah.
So I was a little light on cash on hand. And I bought like an idiot, I bought a expensive watch for my wedding.
Aww.
And I used Affirm because I was like, it's my first like big boy watch, right?
Yeah.
And I used Affirm and it was great. It was like a couple payments of like, whatever. And then after the wedding was over, my bank account got refilled and I paid it off. Yeah. And it was like, it was the easiest thing ever. Yep. But once that Affirm gets your email, oh my God. I get like 4 emails a day from them. Like, do you want to buy some snacks for monthly payments of $1.82? I'm like, this is insane.
Seriously? See, that is what makes it seem so freaking sketchy. It's like, no. Not everything should be, like a monthly nut. That's insane.
Yeah. But for what I used it for that specific, obviously that's an insane scenario, right? Like, I guess if you're,
what kind of watch did you get?
Cartier.
Ooh,
yeah, it's nice.
Fancy.
Yeah. So shout out Affirm. Shout out Max Levchin for my watch.
Shout out Max Levchin.
Yeah, my guy.
Nick's telling us how he bought a watch with Affirm. That's the only thing he ever bought with it.
Sorry about that. Apparently, there's a pool party going on outside.
Oh my God, fun!
Yeah, they're starting their July 4th early. I hope everybody here does as well. All right, where were we? Let's pick up.
We were really at just like tough times for BNPL.
Okay.
I don't know what to say about that. Really,
buy now, pay later. I think is going to be more. My theory would be it would be a more attractive product in a down market.
Riskier, but more attractive, right? I mean, they already have a payback problem.
Yeah, I guess. Has that become public, the bad debt?
I don't know. I don't think so.
Firms? I don't think that's public yet, but we'll see that. Affirm is public, so we should see that with Affirm is going to have to release the bad debt. So that's something, if anybody understands, that's something to watch for, is what does the bad debt look like here? I don't know. It doesn't seem to me like that's going to be a major problem. I'll be honest. I think they're going to be able to figure out which customers to offer this to and which ones to not offer it to.
They have I look up the story every time we talk about it. There was a story that suggested that it was like as many as 1 in 4 were in default on these loans.
That
And they're
seems
already,
incredibly high to
it
me.
looks like Gen Z and millennials are already defaulting on auto loans.
We'll definitely see some of that. Just so you know, a firm is down peak to trough, and obviously it ran up pretty hot there, 90%. So they were trading at 10 times. They were probably a $50 billion company. They're now a $4.9 billion company. So yeah, I mean, that makes sense of why Klarna would come down in value.
Yeah.
A firm's GMV, 8.3 billion. It's about 10% of the size of Klarna's, according to reports, or Klarna is 10 times larger. A firm's loss was 380 million in 2021, and Klarna had a profit. Now we don't know; it's not a public company.
This
yet,
is
exactly.
operating, not net.
Yeah. So the operating loss, which is not at the end of the day the net, because this other expenses have to come out. A firm's was 380 million. Klarna had an operating profit of 1.6 billion. So 7 million customers active for a firm, and I think Klarna has 20 times as more. So if Klarna goes public, I think it would be if they're trading at almost the same price. If it's a $6.5 billion market cap at this recent funding, that's pretty crazy. Klarna also has banking services they provide. So it's gonna be interesting. I think Klarna is gonna go public though, so it'll be interesting to see how
I
these
think the
two
bigger
stocks
question with this is if Klarna is so much bigger than a firm and their valuations are almost the same.
Well, that's
what
what's sort
does
of
that
pointing out. Yeah.
Yeah.
So now they have the same. So now Klarna and a firm have the same valuations, Molly, or within $1 billion or so. It seems if this were to go, and one's 20 times bigger or 10 to 20 times larger in terms of customers and revenue. So it's a very interesting moment in time. This is where price discovery is, just takes a lot of time in a market.
Yeah, we're weighing. I found the story. It was by Qualtrics on behalf of Credit Karma and determined that a third of buy now, pay later users miss payments.
A third miss payments, but that's not necessarily bad debt. That's just missing a payment. So it'd be interesting to see how many of those.
It'll be interesting to see what default rates are. Exactly.
The interesting thing too is, you can do this so granularly. So if you are using this, they might let you do like 2 or 3 transactions at $50, $200 or whatever. And if you don't pay back, they could just turn you off. And then I bet you I wonder how much the retailer has to assume some of this risk for the bad debt. So I know the retailers pay to offer the 4 payments, right? So they get the spread from the retailers who are trying to get more people to buy stuff by offering payment plans. So I wonder if the retailers have to take on some of this risk if people default by offering the service. But pretty cool. And I think this is what Apple is going to do for all their products. You're going to be on a payment plan with them and they'll use their own money. As I predicted, they're using their own money, I think, as the bank, as it were. So
quick update in the breaking news department. According to Axios, BlockFi announced that it has agreed to an option to be acquired by FTX for up to $240 million. So almost exactly what you were predicting with the line of credit.
If performance incentives are met.
Incentives are met, which seems key. The acquisition, would include that. It would also receive a $400 million revolving credit facility from FTX.
Okay.
That's the update as we're
update. So if you put those two things together, it's whatever, $640 million from FTX to backstop this, which I think a lot of people are speculating. Why does FTX want to backstop so much of this? And he said he wants to save the sector, right? He's been upfront about that. Like it's part of the reason he's doing it. So I wonder if FTX and Sam wasn't doing this, what would be happening in crypto land if he wasn't backstopping these projects? But it seems like he's backstopping for hundreds of millions of dollars. If he does that 3 or 4 times, it'd be low billions. Is that the only amount of fraud and or mistakes to be
I mean, I would be curious.
Backstopping.
I would be curious to know which apples he is why he's deciding to pluck certain apples, and probably your comments about user accounts are the most likely, right? Like choosing filter, but it also does sort of feel like if you believe the space is not going to go to zero. Yes, I understand rolling up user accounts on the cheap makes sense.
Hmm.
But also, isn't it going to be a healthier ecosystem overall if like the bad apples just fall off the tree?
Yeah, I mean, what you're trying to do, or what the purpose of a down market and a flush out like this is to flush out the bad actors,
Yeah.
either criminal or incompetent, right? So you have a bunch of projects, companies that were run poorly, they took on too much debt, they didn't have good margins, whatever the reason is. So there's sort of incompetence / weak companies, low performing companies that get washed out, which then sends those customers to the better companies, which then makes them even stronger. So that is a very good function. And then if there's 5 or 10% fraud or bad actors, you get them out as well.
Mhm.
In this case, it might be, just very large numbers of bad actors and very large numbers of incompetence or low competence, I guess, to be generous. The question is he backstopping certain projects because, that directly impacts him in some way, right? So that'll be very interesting to understand as well in terms of his selection of projects. Is it strictly based on opportunity, or is it based on some contagion risk, for him and for FTX?
Yeah.
Which I mean,
honestly, like
about.
I maintain that is, I still think that's what's happening here in a big way. I mean, I think it's also opportunistic, but I maintain that this is about preserving his fortune ultimately.
Yeah. Okay.
I don't know. And I guess we'll see.
Hmm.
Should we do SpaceX? Should we skip ahead to SpaceX? What do we think? We got way too many stories today.
Way too many stories.
Come on.
All right, just
We've been
lightning
working on
round.
this.
Lightning round. Bloomberg, Verge
Lightning
are
round.
reporting, as I had predicted, that Zoom would be looking for other business lines like going after Slack. Everybody knows Slack and Zoom are like two sides of the same coin. We use Slack's huddle feature a bit. We don't use their video conferencing feature. It kind of sucks.
Terrible.
Huddles are pretty good, but there's no reason why Slack can't have Zoom built in, free and just delightful and wonderful. The fact that it doesn't is kind of strange, and it's a missed opportunity, and it's also an Achilles heel. Zoom is saying explicitly now they're going to go into chat and make persistent chat part of the product,
because that's
which is always the problem.
Yeah, like that's been the part about Zoom that makes no sense. It makes no sense that Slack doesn't have better video conferencing, and it makes no sense that Zoom doesn't have a persistent chat that you can keep in search. Like, you're having all these conversations, you're sending each other's links, and then you hang up your Zoom call and it's gone. That just makes no sense whatsoever. Zoom itself could be more persistent if it was a full-fledged messaging app in addition to video conferencing.
If we have a standing investment team call, podcast call, or I don't know, event call or marketing call, if you're having that call every Tuesday, that room should stay up for in between for Wednesday, Thursday, Friday, Saturday, Sunday,
right?
And you talk in that, and then at any point in time, the Tuesday investment meeting can just hit a button and pop up a Zoom.
You could have prep in there, like
everything. Yes,
everything. Yeah, I mean, this is like long overdue. Apparently, we predicted it in February, which is
all right. Let's see what I don't
see
the video.
I don't remember.
Yeah, let's see if I got it right. 48 seconds. But I think Zoom will become a platform. I don't know if you saw they have the App Store now. I can see Zoom becoming, in a way, like AWS, where like Zoom is your video conferencing layer on your computer, and everything is kind of built on top of that in a way like Slack is. So I see it as a platform play.
I mean, I love the idea of Zoom becoming a platform. That's super interesting, because you could imagine, I mean, it's one thing to sort of have APIs where it can plug in, like you can schedule a Google Calendar and it's like, make it a Zoom meeting. That's great. And has plugins with Calendly. But if it also started to incorporate more productivity features, like messaging more than just the chat, to-do list,
persistent messaging would be the big win.
Persistent messaging, exactly. Like if it started to be a little bit of a Slack or a communications platform, then all of a sudden that would be super cool. Like Zoom with a better Slack is better than Slack with a better Zoom, if that makes sense.
Yeah, I mean, we nailed it. It's pretty, in fairness, it's super obvious.
I know. I'm like, we seem really smart, but really, like, this is a no-brainer.
The fact that they're moving so slowly is the weird thing, because Microsoft, Facebook, Google are moving pretty quickly to, try to bring these two things together.
Totally.
Yeah.
All right. Next lightning round. The FCC has I love this, Internet and Moving Vehicles. Like, sort of finally. The FCC authorized SpaceX to provide mobile Starlink internet service to boats, planes, and trucks. Starlink satellites, of course, are these low Earth orbit satellites that deliver high-speed internet anywhere on the planet. And evidently, we're not allowed to sort of be part of connectivity on the move, but the FCC now has specifically authorized this new class of customer terminals for SpaceX's satellite system to expand the range of broadband capabilities to meet the growing user demands that now require connectivity while on the move, whether driving an RV across the country, moving a freighter from Europe to US port, or while on a domestic or international flight.
I think there are two different prices for this. So if you want a Starlink for your house that doesn't move, you pay one price. But if you want it for your boat or you want it on your RV, you get a different price. But having been on a couple of boats, having been, on an RV, this is the constant problem. Like you're on a boat, you don't have connectivity. On a lot of planes, you still don't have connectivity. And on a lot of RVs, you don't have connectivity. And so it kind of ruins the trip. But if you had it the whole way you're driving down to LA or you're going to Yellowstone, the kids had high-speed broadband in the back seat. Oh my Lord, it's such a game changer.
Totally.
And on boats, I mean, this is one of the problems with boats. Everybody always invites me on these like, oh yeah, I got a yacht for the week here or whatever. And I'm just like, I can't be out of communication for the whole time. And then you only like get communication when you get to shore. This is going to be a real game changer for when people are doing cross-Atlantic kind of boats and, in terms of safety as well. Think about how great this is. Like if you were going backcountry, people go backcountry, fly fishing or whatever, you could literally it's not that big, the Starlink. If you went camping and you were going to go, 3 or 4 days into the woods, you could totally carry one of these with you and you have a battery pack and a solar battery and you could bring high-speed internet with you. So people on Everest or you really start to think about the use cases here, people going to, Antarctica, whatever, if the satellites are covering those areas, and I think they are going to.
Business, really. By the way, I'm cracking up at Best T and in the Noti gang saying, yeah, that's the reason I always decline yacht invites. Me too.
No, it's not that. It's like, I'm not talking about super big yachts. I'm talking about
teasing you.
3 cabin boats, right? These are not expensive. You can rent them out for $2,000 a day. And a lot of times people do these kind of little trips. They go scuba diving. You go off, California to go scuba diving, for 3 days or whatever. This is going to be incredible.
I mean, I think they're huge, like they're business, they're safety. I mean, this is already like, if you are in the backcountry for several days, like, it's common to rent a really, really expensive like satellite device so that if you get in trouble, you can call for help.
Those are crazy. Sat phones are crazy.
They're crazy expensive. And so like the idea that you could sort of have some version of this, I think would be incredible. And it's, it's interesting because like I love satellite radio. I'm like one of 8 people I know, but all the people I know who actually use satellite radio live in the middle of the country because satellite is, where you can get stuff. So
you can't stream, right? You can't.
It's not even just that you can't stream. You can't get a radio signal.
Oh, even a radio signal doesn't make it. Yes, that's right.
Like if you're in the middle of Montana, in the middle of nowhere, Montana, you're not even getting AM. You need satellite radio. And so like in terms of coverage of the whole planet, this is a super big deal. Yeah, really interesting.
And they are raising their prices a bit, which makes total sense. I mean, it makes total sense. The stuff is getting better and better. I've had a lot of Zoom calls with people on Starlinks now. I'm seeing it happen more and more. And in the first wave of Zoom calls, it was kind of not perfect. I remember I had Adrian Grenier on from his farm, and he was on a Starlink a couple of years ago, maybe it was a year ago, and it would break up once in a while. Now it's kind of becoming rock solid. So
Starlink. So Starlink residential costs are $110 a month with a one-time hardware cost of $599. Business costs are $500 a month with a one-time hardware cost of $2,500.
RV, $135 a month. So they charge an extra $25 to be on the move, which makes sense. Yeah. And the same hardware cost. So pretty great. And it was I like what they called it. It was like Better Than Nothing was the name of their beta. So they let people be in the beta like, listen, better than nothing. But I saw Antonio Garcia Martinez was taking his Starlink in his car and then setting up a desk in the middle of the desert. I think as like kind of a joke or like Instagram moment, where he was just trying to see like the most outrageous places he could get high-speed internet. This is going to just change everything. Right now, people make a lot of decisions for work on where they get high-speed internet. If high-speed internet's
100%.
everywhere, and my God, what is going to happen when 1 billion people on the planet who don't have access to YouTube, who don't have access to Wikipedia, who don't have access to banking or cryptocurrencies or stocks, or just information or communications, all of a sudden have it? Like $110 a month. Yeah, that's more than a person living in an emerging market can afford. But it's not more than the village can afford. If there's 200 people in the village and it's 50 cents a month each, it's a penny a day, 2 cents a day per person. It's actually not that much. And so very easily, we're going to see 1 billion people come on. And those 1 billion people have so little access to this information and this opportunity that this is going to change the world. Bill Gates, really worked and the UN on getting people out of, there he is, there's Antonio's, in the middle of his photo op in the desert. This is one of the great things during our lifetime. If you pull up the chart for people who are living in abject poverty, which I think the UN said is like I think it might be under $2 a day now. It used to be under $1. The number of people living in like serious, serious poverty went from 1.5 billion to 500 million in the last 20 years. It is amazing what can happen for humanity when you have this amazing capitalistic enterprise going on. This is capitalism at its best.
I can't help but think too that this is also certainly in the United States and also in other parts of the world, just an abject failure of 5G. Because really, like this was supposed to be the promise of 5G. And I'm not saying 5G won't eventually occur, right? But the idea that satellite got there first when 5G has existed and been in development for all of these years, and just the deployment isn't there, is actually a weird failure of capitalism, right? That's like these telcos and carriers, at least in the United States, just sort of like slow rolling it. And yes, having to get block by block permission in some cases. And there have been some regulatory hurdles, but it was an opportunity and Starlink took it.
Yeah. So here is the chart. If you look at this from 1990, and you see Asia is the big beneficiary here of people living in poverty, that's because of the iPhone, Amazon Basics, the just amazing amount of factories being built in Asia and receiving all this money from the West to build their products and services pulled 1 billion people or so out of poverty. Incredible.
Yep.
And then you see here Sub-Saharan Africa still waiting. And I think this is going to be the next big drop off. When these satellites hit Africa, we're going to just start to see those numbers plummet as well.
Mm-hmm. Yeah, it's good news.
5G, they seem to have been fighting with each other of like who would pay for it, yada, yada. They just weren't as aggressively putting it out. And let's face it, it requires a lot of backhoes and towers, et cetera, and so to get 5G to remote areas is still, you still got to run some cable, right?
But you don't have to have rockets.
Right, but it doesn't.
Right, as an infrastructure
5G travels short distances, right?
There's there's like a long range and a short range, and yes, there are technical limitations that have caused 5G not to be rolled out. But even the fact that Starlink could leapfrog 5G in the United States, to me, is a failure of the operators of that technology. All right, what do you think? We're going to talk about basketball? Or are we going to go to
real
Boomer?
Quick. No, I think we should go right to Boomer. No, we can do it real quick. What minute are we at?
We are way over. We're at 65 minutes before OK Boomer.
Oh, okay.
It's a long weekend.
We'll save it for Tuesday.
To be fair, but we could save this one.
We could save it,
yeah.
All right. Do we have to throw it?
We have a toss.
Didn't we do that?
Or no, we need one.
I thought we did it yesterday.
No, we did it.
Yeah, we did it. There's outro.
Great.
I'll talk about the Nets on Monday.
It's at the bottom of the NBA story. I'm actually writing it right now. Sorry.
Outro. Okay. 3, 2. All right, everybody. Have an amazing July 4th weekend. Sunday school will happen, and This Week in Climate on Sunday.
Mm-hmm. Definitely. So we'll be taking Monday off with the rest of the country, but don't forget to follow Jason and me at Mollywood on Twitter, because most likely, even though we probably shouldn't be hanging out on Twitter on a long weekend, it's possible. It's possible.
And I got a bunch of people who pitched me their startups on Bubble, and I'm meeting with one of the founders. It was a very cool company.
Oh my God.
So yeah, use bubble.com/twist. And if you make a bubble where you do a product demo and do it in 3 minutes or less, send me a 3-minute or less product demo. We might use you in an advertisement, and I'm definitely going to watch it because it's under 3 minutes and I can put it on 2x speed. I I may comment on it and give you some feedback. So have a great weekend, everybody. We'll be also in thisweekinstartups.com/TikTok to follow our TikTok account. We're experimenting there. thisweekinstartups.com/TC for the Twitter community and /Discord for our Discord if you want to talk. And shout out to our producer, Justin, who is going to consulting. We're going to miss you, buddy. We'll see you in 6 to 12 months when you start banging your head against the wall, when people you're giving consulting advice absolutely make you lose your mind and you want to come back here. But you're always welcome. We love Boomerang employees who crush it, team members. So
we'll take you back anytime.
Anytime. Come on back. We'll miss you, buddy. You can say bye.
Well, thank you.
Bye. Are you on the
Peloton? Yeah, I appreciate it. We should say use bubbles with an S.
Oh,
that's
look
my
at that.
Final contribution.
3, 2.
Always working.
Use 3, 2. Use bubbles.com/twist. Use bubbles, plural.com/twist to send me your pitch, Molly. 3 minutes and under. Show me your product. Don't show me a deck. Just show me your product. Speak to me like a human being. And, I love good product. You send it to me, jason@calacanis.com or molly@launch.co. Just send us a bubble and we'll watch your pitch and we might use it here on the show. So let us know if it's okay to use it on the show or not. And we'll see everybody on Tuesday with a lot of news, I'm sure. Enjoy the rest up, everybody.
Bye-bye. This sucks.
Bye-bye, everybody.
Okay, bye.
Bye. Okay. Bye. All right. And we're done.
Oh, they're going to put in the notes in the noties.
All right. Here we go. Good luck, Justin. Yeah, Justin will probably, I bet you Justin listens. I bet you'll be